the biggest news of the week so far, business-wise, emerged yesterday when NCB put out this press release that they're doing an APO. And I was like, huh? NCB doing an APO? Why? They're looking to raise, well, based on current market prices of NCB shares, it could potentially be around $21 billion. We don't know what they plan to sell these shares at just yet. You would have seen that in What's Hot in Business just now. But let's talk about it. So David, why is NCB doing an APO? What's going on? Why do they need money?
Well, that's what I'm looking forward to hear at the upcoming EGM, because this was not something you'd have put on your bingo card for 2023. Like you just said, all right, we're probably going to expect to see some sort of chaos, and sort of this, that, but NCB was not on anybody's bingo card, of raising that money through an APO. Remember, you're talking about one of the largest financial conglomerates in the Caribbean. And I say Jamaica alone, but the Caribbean. So it's kind of just surprising to hear that they're doing an APO. And well, they're going to do an APO. And when I heard that they're going to do the APO, I said two things in the back of my mind. And the two things are happening. One, they need additional capital to prepare for Basel III, and they're not going to take on additional debt to inject into NCBJ, which is the bank, as equity, which is tier 1 capital. Or, there's the potential, to lower some of the debt at the NCBFG company level. So we always hear NCB Financial Group is a $2 trillion, group and all that, but NCB Financial Group is actually a company by itself. So Scotia Group, for example, Sagicor Group, they're all companies in their own right. And in the case of NCB Financial Group, which is a holding company, which we own on the JSE or TTSE, that entity would have taken on debt to acquire, for example, Guardian, Clarion, you understand? He got his NCB Jamaica stake based on the structural reorganization a couple of years ago, no additional cost, but their NCB Financial Group has debt on its books, and that is a consideration that you have to remember. So NCB Financial Group had about $245 billion worth of assets at the end of 2022. The bulk of that, about $167 million, came from its investment in subsidiaries. So Clarion Group, Guardian Holdings, NCB Jamaica, and TFOB 2021, which is Link. So why does, this matter? So post, NCB, or I should say post FinSAC, reorganization, which was after, the financial sector crisis, NCBJ would have not, raised or, have any new issued shares from then to now. So to hear the surprise, hey, we're not paying any dividends, we've just changed out 2 executives and we're going to consider an APO, it came as a significant surprise. And we are just, left to ponder what's going on, because the same day NCB released that news, which was yesterday, is the same day that Scotia Group, which is the second largest banking conglomerate or financial conglomerate in a sense in Jamaica, they released their results and they were impressive, significant year-over-year growth, and they themselves have put down more capital towards Basel III on their books. Because Basel III, was originally supposed to be implemented in Jamaica for July 2023, which should have been 2 months ago. Back in May, I heard it was pushed back to January. And then yesterday, I heard Scotia Group CFO Gabriel O'Connor mention that the timeline has been pushed back again to March. So while the Basel III timeline is being pushed back further and further, it's going to come eventually. So that's one of the things that in the back of my mind as a consideration of what's likely to, be one of the reasons for raising additional capital.
That's a very...
It's a lot because, for example...
That's a very optimistic view of what the potential reason is, especially given all the news surrounding NCB this past week. So there's going to be a lot of speculation about what the real reason is, including what may have come to many people's minds first. And our good friend Nano Sense is the one who said it today, raising money to pay their former executives. Because remember now, they now have, how much money they owe now?
We don't know because remember that they had surrendered the shares in July 2021 for about 13.6 billion Jamaican dollars, but we don't know how the settlement of that liability will go. Because it's the shares in the Kalila. What about other clauses that would have been in their contract for the event where they are required to exit earlier than expected? In the case meaning that would NCB required as well to be paying out the remainder of their contract as well immediately?
Well, let me ask Keisha to jump in, because potentially $21 billion, that's the number we're using very loosely right now, is a lot of money. This is a company that made 40 billion in profit last year, so it's on the books, have money. Why do you think NCB needs all this money all of a sudden to come into the market at this time on top of that?
I tend to lean more in line with what David is saying. I don't anticipate it being a payout back to the executives that recently resigned. That would not be a prudent move. And certainly being a regulated entity, I'm sure that would not be permissible. So it is likely to be raising a capital in anticipation of the increased capital requirements. I believe that's what it is.
And for context, Khalila, you have to remember NCB, Financial Group, you might have seen consolidated $40 billion worth of profit, but not all of that money is attributable to NCB Financial Group shareholders, which I should say in particular. Remember, they only own 61% of Guardian Holding Limited and 50% of Clarion. So while you might see a big consolidated number at the bottom, that's not what shareholders will be entitled to as profits. And in the same breath, capital flowing up the group, up to the holding company is another story, because Clarion hasn't paid a dividend since NCB, had acquired them back in 2016, 2017, I think. And I remember going through NCB Financial Group, the company's standalone statements, and there was only about a $45 million difference in terms of dividend income that would have likely come from Guardian Holding in Trinidad, because Guardian paid more than $100 million to NCB, well, 100 million TTD to NCB Global Holdings last year in 2022. And NCB Global Holdings is the one that owns the Guardian shares, and it's a wholly owned subsidiary of NCB Financial Group. So that money flowing up, is something that we have to also consider. Is all of it reaching the parent company to satisfy their own liabilities and to support the bank as well?
And Philip is ever the optimist. Philip says, it's a great move. Love to see it. Our capital markets remain alive and kicking. But
I don't take that stance.
This is a very difficult economic environment and market environment to be trying to raise such a large amount of money. So first of all, David, why don't you agree with that stance? And then I want to hear Keisha on the economic environment right now and the possibility of even raising that much money right now.
So we have to be realistic. That money isn't around. Some persons will be like, hey, I'm clamoring to get some NCBFG shares. But at the same time, you have a couple considerations. One, you have pension funds, unit trusts, and other entities which should have already had NCB exposure, through the equity, in this case being the shares, have some NCB debt and whatever NCB has. So for some pension funds or unit trusts, there are going to be exposure limits that will immediately come up when they're even considering such a potential offer. So that's one thing. The next thing is, going back to the chairman. It's an APO, yeah. And let us say he wanted to maintain his stake. Does AIC have that capital to come in behind them to inject into NCB Financial Group from that perspective? Because remember, last 2 years plus, no dividends has been paid. And you get the majority of it, 50% of it. So if no dividends are coming from NCB Financial Group over the last 2 years, where would he get that capital to actually be supporting that offer? Don't get me wrong, there is money in the markets. Leaching would have sold some shares recently for about 3 billion Jamaican dollars back in June. But it's going to be relatively a lot of work. Not saying the offer won't necessarily get oversubscribed or not get fully taken up, but it's not necessarily an indication that, hey, the market's alive and kicking. Is likely other factors, such as the fact that under the budgetary requirements, speaking to somebody, they're pointing out that one of the considerations, it's not in Hearthstone as yet, is the holding company should not be taking on more leverage past a particular ratio. What does that mean? So your debt equity in a sense shouldn't pass a particular ratio, because what some financial groups do is that they take on the debt and then give it to the subsidiaries to do for their different purposes. So what normally would happen is, let us say NCB Financial Group, the company itself, would go to the market, say, hey, I want some debt, and I'm going to just inject it to my subsidiary as direct equity, meaning new shares for the subsidiary. That's what everybody would do. But with these other factors in the background, it's likely a potential reality that, hey, they can't just go and borrow debt in the market like that and give NCBJ based on other potential factors in the background. Because don't get me wrong, the private markets are quite active, but in the same breath, the public markets might not get the same sort of response, because while it's affordably open in Jamaica and Trinidad, the $21 billion you're talking about or referencing is likely around probably 140 to 150 million US, which sounds small to some people, but have to remember, this is a Jamaican entity which hasn't paid dividends in the last 2 years, has seen the departure of 2 executives, and realistically speaking, has to be doing these new capital requirements. So we can't just say, hey, everything is back to life, everything is kicking. There are other factors that the public would not be generally aware of that would require or kind of push NCB Financial Group to take decision to do an APO and raise equity capital. So one thing I'm actually looking forward to is to see how it's going to be structured. Will it be, for example, whereby some NCBFG debt holders could convert their existing NCBFG debt into shares, and also, how the capital is going to be actually fully used, alongside, will there be a strategic buyer coming in alongside leaching to support this offer? That's a significant thing to remember, because in the case of the Dermot APO, for example, there is about 4.2 billion Jamaican dollars, but $2 billion came from Barita, who took a 20% stake in Dermot at the time. So you kind of get where I'm coming from, Kalila?
Well, on that note, Keisha, because David also mentioned the difference between activities on the private markets versus the public markets. Do you think that with the current environment, publicly, the public market environment, NCB could even raise this kind of money right now?
Yeah, there's a lot of money out there for sure. And with NCB, most of the larger shareholders are the institutional players, the pension fund, the larger companies. So I anticipate the money's there on the sidelines. It could also be an opportunity, as David was alluding to, for a large strategic buyer to enter. I think that may be happening. And that would be very interesting to see. But still, the thing is, as investors, we always have to look on fundamentals. It's not in the moment right now what they would do, but long term, is this company a solid company you'd want to own? Yes. Is the company, no, and we still need the details of the APO, but as is now, is the company attractively valued? Yes or no, you can make that decision. And then when the IPO details are out, are these attractive terms and conditions, and I'd want to participate? You also have the right not to participate if it's renounceable. So it's up to you as an investor, but definitely taking a long-term view, it would make sense to take up a lot of NCB shares at these prices right now, regardless of these intermittent struggles that are going on. Some of the greatest investors, they say, buy when there's blood in the streets, right? Now is the time to seriously consider loading up on a company if you believe it is solid. That's really where it is. So we need to see the details of the APO.
So let me just take a step back here, because the name is Joe, wants to know, what is an APO? So Joe, just very basic, an additional public offer is what the letters stand for. And it is when a company creates new shares in itself that it intends to sell to the public. And by selling it, they're going to gain some capital. So if you've heard the term IPO, initial public offer, that's the first time a company sells its shares to the public. In the case of NCB, they already had an initial public offer many, many moons ago. So it can't be the first time more than once, right? It can't be born again virgin. So it's additional, it's an additional public offer. These are new shares being created and they're offering the public a chance to own brand new shares in NCB. All right, so that's what additional public offer is. David, bringing you back in now in terms of the timeline, because this is still not final yet. The board of directors has approved it, but it still has to go to an extraordinary general meeting. How likely is that EGM to approve this APO?
If they did by a poll, it's already done and sealed. Because what I mean by a poll, so by the way, your APO in Jamaica, international markets here, secondary market offering, same thing, new shares being sold. But when it comes on to, apologies, just lost my train of thought a while ago. Can you repeat the question again, Khalida?
How likely is it for an EGM to approve the APO?
Yeah, so what I was saying was, if it's on a poll method, it's likely to be 100% approved, because if you do it by a vote or a show of hands, the risk is there that shareholders would not approve it. But if it's on a poll basis, then it's basically done, signed, and sealed. Why? Because on a poll, it's actually based on the number of shares you actually have, not necessarily based on a showing hands up basis. So, for example, remember Carrier Cement's AGM about 2 years ago, where the majority of shareholders would have voted against the proposal to have a royalty, but because they're on a poll, and since Cemex would have had the majority number of shares, the decision went through as approved same way. So while the majority of shareholders would have been against it, because it was on a poll and the majority owners casted the vote in their particular preference, it went through. So about if it will be approved by shareholders, it's really to see what is the perspective of the minority shareholders, for NCB to do an APO. And something else to remember is that an EGM requires a 21-day timeline before it can actually occur. So what that means is the EGM couldn't occur this month. It has to probably either occur in October or November. And something to also point out is that NCB FG's book value, meaning the equity divided by the number of shares, is $74.57. So when you think about it, actually, you're talking about potentially getting NCB Financial Group below book value, which should be a steal for some persons. Because realistically speaking, NCB Financial Group has not gotten worse. The reality is that the economic environment has become a lot more challenging, but the group itself is still churning out a significant amount of business across multiple jurisdictions. And when somebody was asking earlier, will it be available locally? So NCB Financial Group is listed on the Jamaica and Trinidad and Tobago stock exchanges. So the offer will be opening in both Trinidad and Jamaica. So not restricted per se to this one jurisdiction.
So I see quite a few comments. Let me take some of them. People weighing in on what this could possibly mean. We have Pablo who says, no dividend, no share appreciation. Why buy this stock? Someone please tell me. So there's that perspective. Let me see what else we have. Elaine says there's something called the APO effect. Christopher adding, this APO will be a game changer. I see a major wealth shift afoot. These opportunities don't come up often. Philip saying market activity contributes to investor confidence. NCB doing an APO is excellent for the overall market. Looking forward to the structure. My feeling on APOs is no different. I think I saw another one. Alex said someone had to make the big move, start that shift. The biggest boy did. And then we have Nano Sen saying, personally, I don't like this move. It will bring down the stock price further. So different perspectives on what this could mean. I think when they finally release the prospectus, that will give us a lot more perspective on, well, first of all, they're going to have to tell us why they're doing this APO, what's the use of funds. what is the purpose of it, and that will give us more perspective on, you know, whether people are likely to buy into it. But I think that theory or possibility of a large investor coming into NCB via this APO is a very interesting one, and one that we should keep our eyes out for.